Imperial opened its doors as a motor dealer over 60 years ago. The group, with a market cap of 33 billion rand, has expanded its operations into oil distribution, logistics, car rental, tourism and financial services, as well as retail. Imperial operates in South Africa, Europe and Australia, and its price-to-earnings ratio is 11, so the cheapest by far so far this evening. Eugene, let's start with you. Is Imperial right now very much a play on where you see car sales going in the vehicle market, or is it much broader than that?
It's a little bit broader than that, but a lot of their earnings is generated around the automotive industry. So if you look at the company, it's highly geared to the interest rate cycle more than anything else. So yeah, it's an automotive play. That's the way we would focus on Imperial.
What are your views on Imperial at the moment, given the fact that, as you say, it's got that automotive play, but it's interesting that they've also, as you say, got oil distribution, but they are looking to sell their Nova Scotia refinery. They say that margins there are just too razor thin at the moment, but very much geared towards that part of the business. What are your views on how the company is performing in light of the slowdown that we're seeing globally?
Yeah, I think what worries me sometimes about the Imperial is that the type of businesses that they enter in is not always focused into the broader strategy, or maybe we don't always see their broader strategy the way they do. So yeah, where one would expect a company like, for instance, Bidvest to focus in a very diversified, service-orientated environment, Imperial, we see it as a very focused automotive play rather than anything else. And I think if they focus on that environment, it enables us to play the game easier and identifying the risks easier. So it's a reasonable company, but I won't get overexcited.
Yeah, and it's a tough time in the markets at the moment. Yes. You were just saying in the break that it's really hard to be excited about buying into any stocks right now, but I'm hoping you're a little bit more excited about Imperial.
Well, what I will say is, once again, comes down to leadership. Bill Lynch, the late Bill Lynch, was a phenomenal leader. And I remember going in presentations to the investment analysts, and he would say, here is why we're going into the logistics business in Europe and wherever. And he had such good logic. Okay, the European economy has reversed some of that at the moment, but the foundation is solid. It's based on the movement of goods, and Europe will be back. They're not going to implode, and that's why I think that this is a good business in the longer run because of its diversity in essential services, that is, the movement and sale of goods.
Well, the way the markets are reacting, you would think that Europe is going to implode right now, but in the meantime, Europe is still there to stay, and they have made an acquisition in Germany, that Lenkering acquisition at the beginning of the year. Eugene, what are your thoughts on that? That, of course, based in Germany and very much geared towards getting exposure to emerging markets. That's, of course, where everyone's seeing the growth. What does that mean to Imperial going forward?
Yeah, I think if you look at the German economy itself, it's actually going reasonably well there. Germany is, as we would call it, a high beta play. It's an exporting economy, and I think if you focus on the economy and the weak euro, it's all pluses for them. So one's got to be very careful to get over-occupied with a negative European sentiment. You've got to zoom in, and I think that environment that they are buying in from a European perspective is the right one. As for the investment itself, I think time will only tell whether it will pay off, but I think it's the right one. I don't know. I would, at this stage, it all depends also on the valuations that you're getting. So they had a reasonable valuation, but it's not ecstatically cheap. If I was an Imperial, I would rather have gone into the emerging environments than expand in Europe at this stage.
It was an interesting one that you're seeing, going into Europe to get exposure to those markets. Why not go there directly? Do you think we're going to see more acquisitions from Imperial? Because they did highlight in their numbers that net debt to equity is sitting at 59%, which leaves further room for expansion. So reading between the lines, does that mean they're on the acquisitive path right now?
It's a good time to be so, you know, because whatever is available is not going to be highly priced. So if they have the funding available, I think that that's a good time. Also, you know, another point is on a dividend yield of about 3.5%, that's also quite a nice hold in the meantime. Would one buy it? It's come back 10% from, I think, around 175 Rand to 160 Rand. That's not much of a correction yet, but so it's a one where one may take a small holding. I would hope for it to come back further, but I think one has to have it as well. So it's another lukewarm. But
it has been a good performance.
Yes.
So 23% up year to date. I mean, that's good. Yes. 37% up on a one-year basis. A hold for you, but what? Not a buy at the moment.
Sure. Will it keep on that rate of progress? I don't know. The market as a whole won't, and that's the trouble. But it's one of those that is a definite, firm buy over time, if on any side.
At what price?
I would say around about 140, and that's a long way down.
Long way down, so not a buy at 158. Eugene, your thoughts on the stock, hot or not, 158?
Yeah, no, it's too expensive for me. I think the stock on a total return is up 30% around on a one-year basis. And even on a relative PE rating, if we look at it, it's currently trading 10 times 1 year forward. We would like to see it around 9 times, maybe 9.5 times. So yeah, I'm not going to pay up for the stock at these levels.